Module 2, Fundamentals of Financial Control. 1. Course Overview. Module 2 builds on the foundation laid in Module 1 by focusing on financial control systems, the backbone of organizational stability, risk management, and accountability. Financial controls are not merely rules or procedures. They are systematic mechanisms to ensure that financial resources are managed effectively, objectives are achieved, and risks are minimized. You will learn to design, implement, evaluate, and strengthen financial control systems, providing a practical understanding of how internal audits interact with financial controls to safeguard assets, ensure accurate reporting, and improve decision-making. 2. Definition and importance of financial control. Financial control refers to the policies, procedures, systems, and monitoring mechanisms used to manage, oversee, and safeguard an organization's financial resources. Importance of financial control includes safeguarding assets from misuse, theft, or loss. 3. Key components of financial control systems. Effective financial control systems consist of multiple interrelated components. A. Policies and procedures. Clearly documented rules and processes guide daily operations. Examples: approval of expenditures, travel policies, procurement guidelines. Policies ensure consistency and accountability in financial activities. B. Segregation of duties, critical to reducing errors and fraud. Example: one employee authorizes payment, another processes it, and a third reconciles the account. Prevents a single person from controlling all aspects of a transaction. C. Authorization and approval controls ensures only designated personnel can approve transactions. Example: expenditures above a threshold require managerial approval. Prevents unauthorized or fraudulent activities. D. Reconciliation and verification. Periodic checks between ledgers, bank statements, and supporting documents. 4. Principles of effective financial control. Accuracy. All transactions must be recorded correctly and completely. Authorization. Only designated personnel may approve transactions. Segregation of duties reduces the risk of fraud or error. Documentation. Provides audit trails for verification and review. Review and monitoring. Continuous evaluation ensures control effectiveness. Risk. Awareness. Controls are designed according to identified risks and potential impact. 5. Interaction between internal audits and financial controls. Internal audits evaluate the effectiveness of financial controls. Audit findings guide management in strengthening weak controls. Financial control systems ensure that audit recommendations are implemented consistently and effectively. The feedback loop between audits and controls ensures continuous improvement in organizational governance. 6. Common financial control tools and techniques. A. Control checklists. Lists of required control activities to ensure compliance. B. Standard operating procedures, SOPs. Step-by-step instructions for routine financial tasks, SI. Budgetary controls, comparison of actual performance against budgets to detect deviations. D. Accounting, software, and ERP systems. Automates controls, reconciliation, reporting, and monitoring. Audit trails, electronic or manual logs that track all financial transactions for verification. 7. Challenges in financial control. Complexity in large organizations with multiple departments. Rapid changes in regulatory and compliance requirements. Resistance to control enforcement by staff or management. Over-reliance on technology without adequate monitoring. Ensuring controls are flexible enough to adapt to strategic changes. 8. Emerging trends in financial control automation. ERP systems, AI, and data analytics improve efficiency and accuracy. Risk-based control design, prioritizing controls in high-risk areas. Integration with internal audit. Controls are continuously assessed and improved. sustainability, and ESG compliance, controls now also monitor environmental and social metrics. 9. Summary Module 2 equips you with an in-depth understanding of financial control systems, their components, principles, and practical applications. By the end of this module, you will be able to understand the role of financial control in organizational governance, evaluate the effectiveness of existing control systems, identify weaknesses or gaps in policies, procedures, and processes, understand how financial controls support internal audits and risk management, apply best practices in modern financial control techniques using both manual and technology-based approaches. 6. Key benefits of internal audits. Operational efficiency, streamlines processes and reduces waste. Fraud detection and prevention, identifies irregularities before they escalate. Compliance assurance, minimizes risk of penalties and legal exposure. Enhanced decision-making, provides reliable data and actionable recommendations. Stakeholder confidence, builds trust among investors, regulators, and employees. Continuous improvement, encourages ongoing enhancement of systems and procedures. 7. Challenges in internal audits. While internal audits offer significant advantages, auditors face challenges such as limited resources and staffing, resistance from staff or management, rapidly changing regulatory and technological environments, balancing assurance and consulting roles, maintaining objectivity while being part of the organization. These challenges highlight the need for strategic planning, strong ethics, and professional competence. 8. Emerging trends in internal audits. Technology-driven audits, leveraging ERP systems, data analytics, AI, and automation. Risk-based auditing, prioritizing areas with high risk or impact. Integrated audits, combining financial, operational, and IT audits for a holistic view. Focus on sustainability and ESG, evaluating environmental, social, and governance practices. These trends make internal audits not just a compliance function, but a strategic partner for organizational success. 9. Summary. Module 1 provides you with a strong foundation in internal auditing, covering definition, scope, and objectives of internal audits, roles and responsibilities of internal auditors, differences between internal and external audits, key benefits, challenges, and emerging trends. By the end of this module, you should be able to articulate the purpose and importance of internal audits, understand their strategic value, and appreciate their contribution to financial control and organizational effectiveness.